Hey, good morning, everybody. Today is Tuesday, August 9th, 2016. Happy birthday, Mom. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning by taking a quick look at the Nasdaq Composite. Yesterday, the Nasdaq was down 7.98 points or 0.15%. Closed right about the middle of the daily trading range, which really doesn't tell us much about what's going on with the market. But we did balk at resistance up here in the 2532 area. We tried to better that area on Friday and failed, and we failed again yesterday. Trading volume was below average. For you followers of William O'Neill, we are in a confirmed uptrend. We have been since June 30th. We have 3 distribution days since confirmation of the uptrend. These 2 distribution days are fairly minor, but this one was a fairly significant day. All in all, I don't think that distribution is much of a concern in this market at this point. Right now, our market timing model is on a buy signal, and the market's bracketed by support down here in the 5165 area and resistance up here in the 5232 range. It'll be interesting to see which direction this market breaks out of that very, very tight trading range. Let's take a look at what the S&P 500 is up to. But before we do that, stocks traded in a tight range after having tested resistance yesterday and on Friday. Monday's trading volume was light. Both the Nasdaq and the S&P 500 closed in the middle of their daily trading ranges. The S&P has been flirting with resistance at its recent high in the 2175 area, and while it's actually bettered that area, it hasn't done so convincingly yet. The Nasdaq balked at resistance in the 5232 area. That seems to be the next battleground for the Nasdaq, which has minor support in the 5165 range. Our market timing model on both the Nasdaq and the S&P 500 remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating a confirmed uptrend in the market with 3 distribution days on the Nasdaq and 4 on the S&P. Our count has both at 3 days. Monday, advancing issues edged decliners by a little better than 4-3. New highs bettered new lows. The put-call ratio jumped back to 0.87, a much less extreme number than Friday's 0.67. The recent volatility in the put-call ratio is an indication of uncertainty in the market just now. Small capitalization stocks bettered large and are now outperforming on a 10-day moving average basis. The fastest market gains generally come when small caps are outperforming. We remain on a buy signal on both the S&P and the Nasdaq, but the current advance appears to be losing steam. While the Nasdaq continues to assault new highs, the S&P is stalled and struggling. The S&P has been indecisive and trading in a tight range for nearly 3 weeks. Although we're on a buy signal and traders should be fully invested or at least approaching fully invested, we should also be keeping our stops in place and current. Okay, S&P yesterday was down 1.98 points or 0.9%. We closed at 2180 and we closed right about the middle of the daily trading range. We also have been struggling with resistance up here at the recent high. The S&P has put in this fairly tight trading range, working on a 3 weeks tight pattern. Trading volume yesterday was below average and below the prior day. The S&P is in a confirmed uptrend with 3 distribution days. Again, these 2 days were fairly minor and are relatively insignificant. This one's more of a concern, but at this point, distribution really isn't a concern in this market. Our market timing model on the S&P is on a buy signal, and we are bracketed by support down here in the 2134 area and resistance up here around where it is right now, 2175, 2180. Pick your poison. Okay, let's talk a little about swing trading. Swing trading is a faster and shorter term form of trading than can slim. In swing trading, we'll attempt to always trade in the direction of the short-term market as defined by the relationship between the Nasdaq Composite and its 5 and 10-day simple moving averages. Our swing timing model has 4 signals based on those relationships: buy long, trending positive, trending negative, and sell short. Swing trading utilizes a much shorter term setup than can slim. Those setups, both long and short, are short-term consolidations, flags, and bounces from significant moving averages. These setups can be as short as 5 days. We try to initiate all swing trades with stop limits, buy or sell, at the precise breakout point, but will generally only close positions at the end of the day. Our swing trading targets are typically going to be a 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to our rule sets. Yesterday, the Nasdaq closed above its 5-day simple moving average and its 10-day simple moving average, which we show in pink and green. And the 5-day is trading above the 10-day. That's our definition of a buy long signal. A buy long signal is an indication that swing traders can be buying long positions at this point. Right now we currently hold only 2 positions, ABMD, which we bought when it broke out of this consolidation in the 1979 area. Yesterday, ABMD barely held on to its 5-day simple moving average. It closed below the 5-day simple moving average, would be a sell signal for ABMD. And yesterday we bought FCPT. When it broke above this little consolidation area here in the 2170 range, ultimately we wound up closing below that level. Our stop on FCPT is at 2107, which was the low of the prior day. For more information on swing trading, please contact me. My contact information is on the homepage. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.